Good evening, and some of you probably good morning and good afternoon. My name is Brian, and we're going to be talking tonight about different size accounts, demo, micro, mini, or standard accounts. My consulting company, JupiterPeakFinancial.com, that's the website where I provide lots of market commentary on some daily, some is weekly macro articles, and then obviously links to webinars and things like that. So please visit that site. You have my email, and then some of the commentary that I put on JupiterPeakFinancial.com gets duplicated over to the IBFX Daily Forex Trading Edge.com website. So either place, but again, there'll be some extra information there on the Jupiter Peak Financial website. So I had planned tonight to go ahead and go into the platform and do some, I guess you could say, trading plans and building some trades, talking about what we're going to get into tonight with the different account sizes. But actually, just in a few weeks, my September webinar series for IBFX has already been released, and you should be seeing emails on that pretty soon. But that's going to cover, one of those webinars is going to cover building trading plans using the MT4 trading platform. So you're not going to see me build them tonight. I'm just going to give you the quick down and dirty, my opinion of, given where you are with your account size and what your goals are, what I think you should be using as far as the different account types. Again, as always, please ask questions by typing them into the questions field there, and I'll try and answer them as we move along. The next slide, we've got to do it. It is your disclaimer. I'll leave this up for just a few seconds. All right, so you have that disclaimer up there. And again, obviously, you are trading leveraged products, so trading plans are very, very, very important. Moving on. So the outline, I always try and provide an outline of where we're going. You should see the outline in front of you. Fundamental analysis, I'll give a quick update on the macro and micro events, talk briefly about the technical analysis, if you're paying attention to my daily market commentary, or at least the frequency of that. Not much to talk about in these markets, but that could change, and that's what I talked about today in the market commentary, so probably worth your time to go ahead and read it. We'll talk a little bit about the technical analysis, those trends, support, resistance areas, and then we'll get into the meat of tonight's webinar, the account type simplified with demo and what is it used for, or what I think it's used for, my opinion of micro accounts, mini accounts, and the standard accounts. A quick talk about your opportunity, and then we will go into the review. All right. So just a quick update on fundamental events. And again, like I said, if you want a more full update, go ahead and read the market commentary from today on my website or on IBFX's Daily Forex Trading Edge website, because I try and discuss the current events going on the fundamental aspect, and there's not much going on. That's about to change. We have some data coming out tomorrow in the economic calendar, lots of data Friday as far as government releases, but also the Federal Reserve. Ben Bernanke is supposed to talk, and obviously next week we have the Euro region talking. We have a lot of economic data as it's the first week of the month coming out of the U.S. So there's going to be a pickup in the calendar. There's also going to be a pickup, I think, in what I call the fall session. School is now back in session. European traders are back from their vacations. All the New York traders are back from the Hamptons and Long Island. So it should become a little bit more active. If you pay attention to the equity markets, we're going up 1 point or down 1 point in the stock market. That's like 0.000%. If you're paying attention to the ranges in foreign currency, you know that they're pretty muted. So should get a little bit more exciting, but obviously we don't know what the news is going to do, so it's kind of like we're waiting and then we're going to react. Some of you may have long-term positions on that you have to deal with as you go through the news events, but most people are trading probably on a shorter-term basis, and they're going to react to that news, and hopefully there is news that makes the markets move that we can react to. So Lots to pay attention to. Please keep updated through IBFX's education site and the different collaborators, and obviously my commentary. So your broker is providing great information. Take advantage of it. One way to stay on top of the economic calendar and be aware of what's coming out in the future is forexfactory.com, and there's a link right there through the IBFX website. Also, wherever you are around the world, you probably have access to CNBC or some version of it, and you should be paying attention to that station, because they'll give you their analysis of what this news means, or what these events mean. Obviously, you also have Bloomberg, which is worldwide, which you can also stream over the web, and then obviously other market sites that you may be using. Technical analysis, again, not going to talk too much about this because that's not where we're going today. We're not doing any technical analysis as far as the meat of tonight's website. But as far as what's been going on, definitely range-bound trading as of late. It's been range-bound for probably most of August. It's been, usually August is a slow month, but this is one of the slowest August periods that I have ever seen. So like I said, hopefully things will change, but maybe all of these news events that are coming out are just duds, and maybe they're all positive for the world economy, and maybe they're positive for the stock market. And if that's so, that might keep volatility down, and as we know, volatility being down could keep trading ranges muted. So we will see. Just looking at a few pairs, the pound US dollar did have a breakout to the upside, and it's kind of come back a little bit, but it definitely did break out of a really tight range that it had for quite a while. So that's something to take a look at. Is it going to continue that trend to the upside? So the pound is breaking out to the US dollar, and euro has kind of worked its way to the upside, but didn't really have necessarily a breakout in the same way that the pound did to new levels, but definitely working its way upside. Overall, that rough relationship is still in place. So intermarket relationships, if the equity markets go up, for the most part, the dollar stays a little bit weak. And then obviously you can kind of pay attention to that when you're looking at some of your commodity currencies. If the equity markets go down, maybe oil gets dragged up, so the United States dollar gets weaker to the Canadian, as the Canadian dollar has a lot to do with oil prices. Or if commodities go higher in general, then you might have a commodity currency like the Australian dollar going higher. So keep on top of those intermarket relationships. I'll change here the slide here and just pause here, and just so that you can see a little bit about what I'm talking about with those pairs. So here's a daily chart of the pound, and you can see that it was just in this tight range for June and July, and for the most part of August, it was capped around 57.40, 57.50. That was its resistance, and then all of a sudden, the pound definitely broke out to the upside, and actually that red line right there, that's kind of your old resistance, new support. So it came right back down to that level and then blasted off again. So right now, I would say that congestion area is right around 57.50. We'll see what happens if more data comes out, what that means for the pairs going forward. The euro, as I said, a little bit more range bound. It has worked its way higher, but again, on a daily chart, again, you can see that we've worked our way higher, but we still have some resistance points quite close, whereas the pound, it doesn't have many more resistance points as close to this area. So the euro seems to have some resistance ahead. Obviously, there's a lot different fundamentals in the euro region, and we're going to find out some more information about the euro region over the next few weeks for sure, as we have some major speakers that have influence over there starting to talk. The Aussie dollar is another one. I can blow this one up so that you can see it. It's had a good run. It's obviously coming back. This trend line actually has been in place for quite a while. I've written a lot. I actually posted this on my daily market commentary today. So this trend line seems to be providing resistance. So if you were watching it, you probably got into a trade here going to the downside using that trend line if you were looking at it previously. Obviously, trend lines, moving averages, support, resistance, whatever it is, no guarantees out there, and trading plans are essential. And trading plans and stops and things like that are really, really going to be essential if this onslaught of data that's coming out over the next few weeks is going to cause volatility to come back in. Some people kind of forget what volatile markets could be like, but remember, usual trading ranges per day could be 150, 200, 250 pips in a day. We haven't maybe seen 250 pips in a month. So just keep in mind that things can get more volatile very quickly. So you want to make sure that you have money management and discipline and trading plans and things like that. So going back to the slides. All right, so moving from technical analysis into, again, the topic for tonight, talking about the demo account first. So demo account. Why would you use a demo account? First and foremost, it's probably for a new trader to get comfortable executing trades. I have done a lot of webinars that you can find, and I'll give you the link to it at the end of this presentation, on placing trades using the MetaTrader 4 platform. And I will do that again, like I said, in a couple weeks. So basically, once you get comfortable, and if you do your work and you're committed to this, it shouldn't take more than a week to basically ask some questions to the great staff at IBFX. Maybe watch some tutorials that I provide and other people have provided, but basically get an understanding of how to place an order, how to execute the order, how to put a stop in, how to put a target price in, and that kind of stuff, and be on your way. And that's it. That's the only really reason you should be doing a demo account. The other reason really is maybe to test. So get comfortable if you're new, test new strategies if you want to, but really that's it. I don't like people working on a demo account for a while if they're up and running as a live trader, because they don't treat it real. I don't care how, who you are. Most traders say, oh, I'll treat the demo account like it's a real account. Most people don't. They just kind of let their rules slide by, and they don't treat it as seriously, and they don't have real emotion in place. So I don't like people being demo account traders for long. My clients that I work with, like I said, I let them get comfortable with it. I give them a very small time frame to do that, and then they're off and running live, having real emotion, having real money, at stake to basically manage. So I want them live very, very quickly. I don't like to sign them off to be live until I think that they're ready to be live and they understand how to read charts and do fundamental analysis and build a trading plan with my help. But obviously, I don't want them doing that on a demo account. I urge them to go live very quickly. So don't be stuck in the demo phase for a long time. It's just a bad place to be. And like I said, most people don't treat it, as they would a live trade. Use the resources to help you place the trades. Use the staff. Use my webinars. Micro and minis. Some of you may be using micro accounts. I talk about return on investment. A lot of you have worked for companies out there. Some of you maybe have owned your own businesses. If you're trading a micro account and you're trading for pennies at a time and you're spending an hour or more, I can't really understand the return on investment that you're getting and saying this is worth it to be sitting here for hours a day and looking to make 30 cents or 50 cents or $1 or $1.50. You're better off going out and getting a job and making $10 an hour or $15 an hour, whatever it is, than doing that. So I don't think, really, my personal opinion, I just don't think that there's a room for a micro account. I just don't understand what the person will be trying to achieve with a micro account and saying, this is good, because obviously you're probably not committing a bunch of money to this, and that's obviously where you have to think about, is this going to be worth your time and your return on investment? Again, this is my opinion. Take it for what it's worth, but I'd rather people have a serious savings plan and say, I'm going to commit to getting enough size up here that if I do make a trade, whether it's a winner or a loser, I'm okay with it because it's worth my time being here. And that's where you move into the mini accounts. I think the mini accounts are perfect. I think the mini accounts are great for anyone between basically zero and probably up to $10,000. I think that they should be in a mini account. For the most part, not all pairs are equal, but for the most part, you're looking at $1 per pip, okay? $1 per pip. So if you put on one contract and it moves 1 pip, you're going to make or lose $1. All right, and so that becomes pretty real. And I'm going to talk about how many pips you should be risking depending on your account size as we go forward. So even if it's a larger account, but you're new, you shouldn't be in micros, you should be in minis. Once you learn to physically make the trade using the demo account, I think you should go right to minis. And as I said down there at the bottom, it's a great account to have, as you can always scale up or down. It gives you flexibility based on what your trade is. Some people have different trading strategies. They might trade and risk 10 pips here. They might risk 30 pips here. They might risk 40 pips here. And having a mini account lets you have that flexibility. Having a standard account, you don't have that flexibility. So moving forward into standards, I do believe that this is for the experienced trader with a larger account size, and I'm talking $10,000 or above. If you don't have $10,000 and above, you should probably be staying in a mini. And some standard traders, some traders with 10,000, 15, 20,000, they still like the flexibility of having a mini. So a mini account is, I think, the perfect blend for what most people are looking for out there. So work the numbers. Like I said, I'm not going to spend too much time in the platform creating a trade because that's what the next webinar is geared towards. And I've done many webinars in the MT4 platform previously. So if you're looking for that help, please look up those webinars. And like I said, I'll give you that link. So account risk and trade risk, two really, really important terms. I've done a lot of webinars on trading psychology and trading plans. And I do believe that if you don't know the amount of pips to risk for your account size for your trading time frame, then you could be set up for a rough experience. So let's just take a $10,000 account. Most traders, the industry standard is risking 1 to 3% of your account risk, of your whole account. So if you said, I want to take the middle part of that, between 1 and 3%, I'll take 2%. Stamped on your forehead, if your account is $10,000, you shouldn't be losing more than $200 per trade. You shouldn't be risking more than $200 per trade. So a scalper who might be risking 8 or 10 or 15 pips, somewhere around there, let's say that they're risking 10 pips because they're a short-term trader. Well, 10 pips with a standard lot, all right, is going to be $100. If one standard lot moves 10 pips for or against that trader, they're out $100 or they're making $100. So most people as scalpers risk 8, 10, 15, maybe 20 pips in a volatile market. You can't risk more than 20 pips, all right, if you're doing standard lots. You can only do one contract, because one contract times 20 pips times $10 is going to be about $200. You can only put on one contract. If you're doing 10 pips, you could do two contracts. Two contracts times 10 pips times $10, okay, is going to be your $200, all right? So that's where you don't have that flexibility. So you might say, hey, I have a $10,000 account. I only want to risk 2% because that's the right amount, and I want to risk 30 pips. Well, then you can't do a standard contract at all. You've got to back it down to the minis, all right? Because if you did one contract and risked 30 pips times $10 each pip, now you're risking $300 and you're starting to risk 3%. And if there's a little bit of slippage or anything like that, or a fast market, it could be more. So just keep that in mind. That's why most people, unless they have $10,000, $15,000 or more, they're probably staying in the mini account. All right? The mini account gives you more flexibility to say, hey, in this specific trade, I don't think that risking 20 pips is appropriate. I think that risking 23 or 25 or 30 is appropriate. Now you can do that because you can still lose the same amount of money you wanted to lose, $200, but you can do it by trading a mini, seven contracts in a mini instead of one in a standard, whatever it may be. So hopefully this makes sense to you. How much is in your account? Get 2% of that number and stamp that number on your forehead. So if it's a $5,000 account, you shouldn't be risking more than $100. If you have a $100 account risk on a $5,000 account and you risk more than 10 pips and you put on one standard, you're going to lose more than $100. If you risk 11 pips times one standard contract, that's $110. You're risking more than you should be if you only wanted to lose $100. Stay with the mini account if your account size is 10,000 or smaller. That's my belief, like I said. Hopefully that math is pretty easy. If your account is a smaller subset of some larger portfolio, equity portfolio, retirement portfolio, commodity holdings, whatever it may be, then you might be able to say I'm willing to risk 3 or 4% because I don't have $10,000 in my account. I have $150,000 or $200,000 or $500,000 overall, and I have about $10,000 in my Forex account to do specific things. That's where you can, bump it up just a little bit. But if you only have one investment account out there or a trading account, and as we know, we don't want to be trading with capital that we're not willing to lose, and you start to get a little bit big for your britches, big for your account size, that's where trouble starts to come in. So stick with the mini account. I think it's a great, great place to be. Like I said, it gives you flexibility to risk the correct amount of pips per trade. And I can't stress that enough. The trade and the markets and the volatility and our analysis, that tells me how many pips to risk. All right. My belief, a short-term trader, a scalper should be risking 8 to 15 to 20 pips at the very most. A swing or intermediate trader might be risking 20 to 40 or 50 pips. And a long-term trader might be risking 75, 100, 200, 400 pips, all depending on what they're looking to go for. All right, so just keep that in mind. So I'm just going to look and see if there's any questions before I jump on. With a standard account, you could use a fraction of the contract, like using point. Exactly. So absolutely, if you wanted to, and you wanted to just break down your standard account, yeah, you could just say, I have one standard account, but I don't want to do that. I want to do half of that. So you could break it down and absolutely use the increments of it. So once you have the account size where you're mostly trading standard accounts, then you can kind of get bumped up there. But like I said, some people, like I said, get too big too quickly and they risk the wrong amount. So I think that unless you're comfortable with that, and if you have the account size to do it, go for the standards. But like I said, being newer or having 10,000 and below, you probably want to stay with the minis, because in effect, if you're splitting up a standard, you basically are trading a mini anyways. So if you trade minis more than standards, have the mini account. If you trade standards more than minis, then you can have the standard, and like you said, you can do the fraction. So I do that all the time. I think a lot of people do that. Like if I put on X amount of standard contracts and I want to leg out of the trade and take some profit off the table, yeah, now I put on 2 contracts, 2 standards, and I took off 1.5 of them. So basically I have 5 minis left or something like that, as I wanted to take some profit off the table and move my stops up and things like that. So absolutely you can do it. But like I said, for someone with a $8,000, $5,000, $3,000 account, there's no reason to even think about standards, because you're just going to blow out your trade and account risk because you're going to have too much at stake. So that's a very, very good point. And that's exactly what I'm talking about, is what's right for your situation. I'm just kind of giving you my opinion, but you made a very, very good point. So really quickly, a lot of people, like I said, have trouble, may fail, have muddling success if they don't understand what's right for them in their situation, whether it's how many pips they should be risking per their account, how frequently they should be trading, how long they should be in a trade, whether they should be a day trader, a swing trader, a longer-term trader. So I provide these no obligation, no fee engagement interviews where I kind of just give you the lay of the land, given my unbiased opinion. I have no reason to lie to you. I shoot very straight, and I just say, here's what I believe. I type it up in a Word document, and I send it off to you, and then you have all the links to the different commentary and different support that I provide, and that can be done over Skype. That can be done over email and things like that, and set that up, and it can be done over mobile phone depending on where you're at. So, if you're asking about those interviews, you have my email, set it up. I've done this a lot. I do education for various different sites out there. And like I said, it's 30 minutes of your time. There's no hitch to it. There's no, selling or anything like that. Just telling you what I believe. So sometimes it can be very, very helpful, and I'd be surprised, if someone like me is giving you the time, why you wouldn't want to take it. So just keep that in mind, that offer is out there for the IBFX customers. So to review, I kind of gave you my opinion of fundamental events, even though there's not much going on. We'll obviously be able to talk a lot more about those fundamental events in a couple of weeks when we get back together on a webinar, and obviously in the regular market commentary I provide on a daily basis. Technical analysis, we looked at a couple charts. Again, I didn't want to spend too much time on technical analysis because I wanted to just get to the meat, and that was the demos and the micros and the minis and the standards, and give you my opinion of what you should be doing given kind of who you are. And if you have more questions on that, going into the account risk and trade risk for your personal situation, that's where that engagement interview comes in and your opportunity. Next webinar, same kind of layout. I'll run through fundamental analysis. Like I said, we might have a lot more to talk about than we did tonight. Technical analysis, we might have a lot more to talk about because we might have a lot more movement. Who knows? We'll go into those intermarket relationships because we could have various central banks out there, the ECB, the Federal Reserve, maybe lowering their interest rates, by then. And so we could have some big fluctuations. Maybe one region of the world does it and one doesn't. So lots of exciting stuff to pay attention to. Hence, having a trading plan, making sure that you're risking the right amount because things could get a lot more volatile than they are now. The main topic is not to be determined anymore. It will be building trading plans for short-term and long-term traders using the live markets on the MT4 platform there. A link to my education recordings. Like I said, IBFX provides a lot of great education, so go to their education site. Myself, Raggy, other contributors provide a lot of great information. DailyForexTradingEdge.com is IBFX's website, where I provide almost daily market commentary, a little bit slower this week just because obviously a lot of people are on vacation and things like that, and the markets seem to be on quote-unquote a vacation. So between DailyForexTradingEdge.com and then also heading to my site, JupiterPeakFinancial.com, you can learn a little bit more about me and kind of my thoughts on education as a whole when it comes to the markets, and a lot of other links to different commentary and education that I provide. There's about almost 2.5 dozen videos out there. You can link to them from my website. You can also find them by going into YouTube and searching for the Interbank FX videos, and you'll see my webinars that I've done on technical analysis, fundamental analysis, trading plans, and things like that, various different topics. And this one, as long as we are compliant and I don't give you any buy, hold, or sell recommendations, then this one should be up on that website shortly as well. I do provide some daily intermarket commentary on the Social Connect site, IBFX Connect, under the tag The Locals Take. I haven't been as active there lately just because I don't really want to be talking if there's not much going on. So I think that you guys can get a good feel of how frequently I'm trading and what I'm doing by obviously the amount of posting and writing that I'm doing. So pretty short, quick webinar tonight. IBFX is really doing a lot of work as far as analysis and looking to try and serve you as a customer and try and make sure it provides content that you guys need. So I think that you get some feedback. You know that you can provide feedback after this. You can always reach out to me. You can always reach out to IBFX, directly. Let them know what you're looking for. Let us help you. We have great people here that can provide great education, and we just want to make sure that we're helping you to be a successful trader and investor in the markets. So please, get a hold of us as you need to. Let me just see if there's any other questions. Please repeat the engagement interview. Not much there other than my email, and basically, like I said, it's just a really down and dirty look at your individual situation. As you'll see when you go to my website, I tailor education. I kind of look at it as having a fiduciary responsibility with each and every one of my students, and they're all different. Every single one of you is in a different place. And until you understand that, and until you know how to filter information for your individual situation and trade in the right frame of mind for your account size, trade in the right frame of mind for your personal lifestyle, your family, whatever job you may have out there, that's where most people fail, is they just have unrealistic expectations coming into the markets. Lots of people look at it as a lottery ticket, and that's really, really wrong, and that's really sets people up for failure. So like I said, I kind of give you my really, really shoot straight from the hip, unbiased opinion of what I think is achievable for you. Some people may not like it, but I don't owe you anything. All I do is owe you my 100% honest opinion. I've been doing this for way too long to blow smoke, for anyone, and I care about the markets because they provided me to enjoy, life, and I don't think that that you guys should be shut out from it. When I do a lot of teaching, my first slide is I'm a ski bum. I was a ski bum, and I met a trader, and he taught me to trade, and I've been doing it for 15 years, and now I've been educating for about 5 years for individuals, businesses, and online brokers, creating education, local universities. So I enjoy it. I take it very seriously, and I take the relationship with any one who works with me very, very seriously, and they have to know that going in is I'm not going to let them slip, and I really do feel if they're not going to have success, it's probably because they're not doing what they should be doing. This isn't brain surgery, you guys. Everybody should have a shot at success in this, but it does take some work. It does take some experience, and it might take some extra help that people can't do on their own, and they might need it. Just like if I want to go out and get stronger or lose weight, I might need a personal trainer to help me with nutrition and working out. This is no different. I'm just basically here as your second set of eyes to guide you along in your path to success in the markets. So have a very, very good evening, morning, afternoon, wherever you are. Have fun with the markets over the next couple of days. Like I said, hopefully there'll be a little bit more activity. Look for my ongoing education. I look forward to seeing you in a couple of weeks. And please reach out if you have any questions. And again, like I said, let IBFX know what can help you to be a better, more educated trader and investor. So happy trading, and thank you very much for your attendance tonight.